Hello guys and welcome back to another post-market analysis video. Today we'll see how Bank Nifty and Nifty have acted in today's markets. As you can see, it's a pretty good a trending day towards the downside on the Bank Nifty. So this is a Bank Nifty chart on a 5-minute time frame. And to start with, let's check from the first candle, which is this candle. It has opened up at very close to this previous swing high from the previous working day and also the previous swing low on the left. So here you have the two predefined areas that are coming from your previous working day, right? So all you have to do is wait for the proper price action, either support taking place here or it's breaking towards the downside. So now let's check the first opportunity looks like let's go in very detail today because this is only post market analysis video, and we'll have pre market analysis report for tomorrow morning. Okay, so from here on we'll try to put two videos. One is on the post market analysis, and the second one uh, will be your pre market analysis video. In fact, your first video is going to be the pre market analysis video from the morning, because that is going to be the first video, and after market we'll see about the price action of that particular day covered in our post market analysis video. All right, so here we have looks like our first opportunity is at 9:25 candle at this 5 minutes time frame. Look at this, because you have seen a green candle which is also, see, these two candles put together, this green and previous red candle, these two candles put together is also giving us a variation of piercing pattern. So looks like it's a good sign at your support area that is coming from the left. So you have multiple reasons here. So one is your support area, and the second one is this particular candlestick pattern. Okay, so this candlestick pattern itself is the second reason, and the third thing is you should always check for a risk versus reward ratio. Okay, so here you have this as your target and this as your stop loss. Look what's happening here with the risk versus reward ratio. Even your risk versus reward ratio is good because it's 1.51, but since it's very early to take a trade, because on a 15-minute time frame you would have still be on your first candle, your first candle in your 15 minutes time frame would have not seen any closure. So it's always better to check for one more confirmation to get into your trade. In this case we can take the help of volume. Okay, so look here, because we are not even 15 minutes into the market. So here with this candle, and also this is not very strong reason. See, if it is, it's just a variation of piercing candle, but if you have seen a close above this midpoint half of your previous red candle's body, if you see this green candle close anywhere above this line, then in that case that would have been little stronger candlestick pattern compared to this, because that has closed more into your red candle. In fact, that is what the piercing pattern is. It's just a variation of previous piercing pattern. So it's always ideal to take another confirmation that comes with our volume. As you can see here, this green candle's volume is not more than your previous candle's volume. So that means that it's showing up a little doubt. Okay, it's a caution sign for you to be alert not to take trade towards the call side, and we are a bit saved there if you have taken this confirmation. But always remember, from today, if you want to take a trade just as the market starts within 15 minutes of the market, then you better take confirmation from any other indicator also. So let's look at here what has happened after that. At 9:40 you have seen a breakout from this area, and also you have seen a confirmation candle. Your next candle low is lower than the previous candle, and your sorry, your high is lower high, and your candle's low is also low, and your candle's close is also lower than your previous candle. So all this is giving us confirmation towards the downside, saying that this is a genuine breakout towards the downside. So this two candles put together. okay, is towards the downside. And also, if you can see, volume has increased on this candle, on the second candle after the breakout. So now here you have a genuine breakout from your support that we have drawn. So now what you should have done is see how is your risk versus reward ratio there. Your stop loss would be above that. Any close above that should be your stop loss, and your target would have been this, which is 1.37. Your reward is going to be 1.37 to your risk. So this is a right trade at 175 points. Okay, so you would have seen 175 points of um, points right in this trade. Okay, so now what should you do? Either you exit from your target, sorry, your trade, or you can simply trail your stop loss. So initially let's assume that this red line is your stop loss. So previously your stop loss was there above this support resistance area. Now because your price action is towards the downside, it has crossed this support area. Now it becomes the resistance area. So now what should you do is you should get your stop loss from cost to cost to that point at least, and simply trial your target. So let's now change the color of this target line. This is your target line, and from there your next target is definitely this, because that's the next previous swing low on the left. So now your stop loss is there, and this target is already achieved. Now what would you do? It has simply trailed all the way towards sometime it spent towards the sideways momentum. Okay, so after that you have seen at around see at around 12 o'clock you have seen your second target is reached. Now what should you do? You should get your stop loss from cost to cost to your first target levels. After that, okay, what should you do? You should simply make your target as your next, which is your next reaction on the left. This is your next reaction on the left. So either you can take this point, or you can also take this point. Okay, let's take this point as your next target. So what should happen ideally now is your second target is removed, and your stop loss has come to this area. Okay, because you have, okay, excuse me. Okay, so now your third target is also reached. What should you do? Now this is your stop loss area. Okay, and you can still trial it towards the downside. So which is your next level? This is your next level. Now you will remove this, and you would, okay, after this level is reached, you would move this area, this stop loss to that area. So after this target is reached, you should look whether it's going to this level again or not. In this case it's not going. Okay, so now if you look at the price chart on the left, okay, so next swing reaction is pretty far. Okay, next reaction is pretty far somewhere here. Okay, so let's see whether or whether our price action is coming all the way till there or not. So after, when the price is reaching at that level, your stop loss was your stop loss was there. So now you see your next level was not, it has not reached this level because it's very far. Okay, and already market has moved has given us a good momentum towards the downside. It could not reach this level. But if you are at your in your trade almost till the closing, then okay, your okay, then in this case, yeah, now in this case you would have seen a good 570 points of momentum in the Bank Nifty. Okay, so it's simple price action analysis. I hope you have understood how it should be, and that's it, simple. So you would have seen 570 points of momentum in the Bank Nifty if this was followed. Okay, this is how the Bank Nifty's price action was today. I hope you have understood this. So now let's switch to a Nifty's chart. All right. So here you have the Nifty. So Nifty is no different. It has opened somewhere there. Okay, so while it's coming down, the nearest price action is see, this is a minor support level, but you can, to be on a safer side, you could have taken this because you have more candles taking support at this area. So now from here you have seen a breakout and also a proper confirmation candle uh, lower with a lower high, with a lower low, and also lower close. Okay, so here you have seen a proper breakout, and also it is giving us an additional confirmation with this bearish engulfing pattern after that. So from there, if you see, you can trade here with this as your stop loss, and your stop loss was never taken. But the problem here is it's not giving us a very clear picture about the target as the Bank Nifty. So that is why we are not validating this particular trade, because this should have been your a target level on the left, right? So as you can see, we are almost there, we are almost there. So how can you trade this with this as the stop loss? No, it cannot be done. But how you could have traded here is, see, after the breakout, okay, it has shown that it's not a original breakout, it's not a genuine breakout. So you should wait for the price action again to come into this area. Okay, so now here you see, here you have seen a bearish engulfing pattern one happening, and you have seen a bearish engulfing pattern two happening there. So here you should have taken an entry with this as your target. Even here that worked, and after that, if you want to trail, you can trail based on our rules. But you see, this is your next target, your next target is also reached. In that case, your stop loss would have been at your target one when you are at target two. So this has given us a momentum of say 55 points in the Nifty, and look at the risk versus reward ratio here, it's 2.6 times. So it's a pretty good trade in the Nifty as well. So that is how you should have seen, under the light of price action with the pure support and resistant levels. It looks simple, but it's not. You should spend more time in your live markets practicing this. In the beginning, while watching the video, you will know that it's pretty simple, but I promise you it's not. All right, so if you want to become a good trader, all you have to do is spend more time in the live markets. So that is the only way for you to learn. All right, so see you in our pre-market analysis video tomorrow morning. Until then, if you haven't subscribed our channel, please consider hitting that subscribe button, because this is the place where we do videos on Bank Nifty and Nifty, and we try to learn stock markets from the stock markets price action every day with the price action dissection, just like this video. All right, so see you guys, see you in the pre-market analysis video. uh, Thank you.